All right. Good afternoon, everyone. This is Mark P. Markets. Thanks for joining me for another Greenbridge Investing live stream. In this analysis, obviously, we're going to be going over Bitcoin first. And then I want to talk about this stock market situation, which I briefly mentioned earlier today in our chat room. And then I want to also talk about some long-term stocks. I saw some questions about what can we get into for the coming year, and I want to address that as well since it's obviously on many people's minds. Okay, so with that being said, if you're new to the stream, please share a chart, a symbol or a market that you'd like to see so that once I complete my analysis, I can get into your charts, okay? Because I want to make this useful for you. All right, so let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, before I get into the details here, I just want to point out one thing that's important. Okay, here, if we take a look at this, for those of you that are new, I just want to point this out. We have a swing trade signal service by text, by email. Obviously, we have portfolio management ideas, and we have a chat room. For 6 months, you can get it for $299, okay? And for yearly, you actually save 33% and you can get it for $399. Now, what does that come to on a monthly basis? This is about $50 a month for the 6 month, okay? And for the yearly, that's about $33.25 per month. So these are good deals. We no longer have the what do you call it? The monthly membership, because in order to benefit from our strategies, and this is a very important thing to realize, in order to benefit from our strategies, you really need to have a longer term commitment. Our strategies are not day trade strategies. You know, we have swing trades, we have position trades, and they take a while to realize their profit targets sometimes, right? As we saw with things like Workhorse and some of the other ones over this previous year. Now, our members have done very well because they also made that commitment and they stuck it out. And one of these good trades can actually pay for your entire year's worth subscription. As I bring that up, Michael pointed that out a while back, and it's true even with these new prices. Okay, anyway, so let's get into this here. Hey, DJ, nice to see you. Again, share your charts, please. Everyone share your charts in the chat so that I can, once I get to the chat, I can get to them. So let's talk about Bitcoin first. All right, now, as you can see, the title is Get into the Next Breakout, right? And avoid the fake out. Plus, I want to take a look at gold too. But here's the thing. So I sent out a swing trade idea. I was on Sunday, and we actually canceled that idea because the market pulled back a bit. Now, we didn't get caught. Hey, Michael, there he is. We didn't get caught in this pullback. Why? Because it never went to our entry price, which was 19,625. Okay, if you look at the highs here, 19,418, right? So we use those buy stops and we make the market work. Now, so we were able to avoid this move here. This would have been a stop out. And this is where I like to point out, and you've heard me talk about this before, reactive trading will get you caught in something like this because you're like, oh, it's going higher. And then you pull up some guru thing somewhere, and oh yeah, Bitcoin's going to 25K by tomorrow. So you thought, okay, it makes sense, and you buy it, right? And then it does this to you, and you get stopped out. So this is typical of a consolidation. Bitcoin is still strong. There's no question it's strong. This consolidation, if you can see, I have this blue box drawn here. That's a support zone. It's just below the 18.5 inflection point, and there is clearly support there. We had a pin bar that developed just, what was that? Yesterday's close there? Okay, so we changed we canceled the previous swing trade and we issued a new one with different prices. Okay, so obviously that went by text, by email, so our members received it. And that is not in play yet. Why? Because we haven't taken out the high. Now again, for people that tend to react to things or don't let the market work for them, you had to take some pain if you just bought into it, right? And what was today's low? 17,908. Now, this is another pin bar, which is a good sign. All right, I'm anticipating that once this thing starts to push, we get that positive momentum. The key will be to build enough momentum to take it through the 20K. We need to see the higher high. Now, this type of consolidation, we have a higher low basically established here. We have not taken out yesterday's low. Those are very good signs. So we take yesterday's high out, and this thing starts to build momentum, and then we take out those high 19s. For one, as many of you know, we have a target there, right? So that'll help us reduce our risk while everyone else is piling in for the breakout. And then we need to see this thing clear the low 20Ks. This is the thing you need to take away from this analysis. We still have this reversal zone here, right? Between basically 20 and 2200, right? That area there. If we cannot clear that and we see a bearish pin bar develop here instead or something, that's when you should consider making an adjustment, perhaps taking some more off the table, tighten your stop, something. Because if it fails again, that means there are going to be a lot more longs that are caught in this thing, and the pullback may be more dramatic that time, which can see a break of the 17K support, right? And maybe take us to the 16s. So that's the failure you have to watch for. Now, can I predict that failure? No. The market needs to prove it or not, right? So if the market can close decisively above this level, which is what we want to see because a strong market should make a higher high, then we're in good shape, okay? Even if it hesitates above, who cares? As long as it clears the level, and we'll be out of one portion of our trade anyway. So that's at least, we've locked something in, and then obviously where the rest of the targets are. I'm looking for this move to take Bitcoin into that 24K area. Again, that's not going to be a straight line, but over the coming weeks, it's very within reason. It's very proportional to touch that 24K, and obviously we'll be out by then. Okay, so I just wanted to give you some perspective there. That's the way I'm looking at this thing. Again, this is a swing trade perspective. This is not, an investment type of thing. People always want to know, well, when's Bitcoin going to go to 50K? That's very long-term type of stuff. We're only interested in what it does, or the trades that I send out, the swing trades, are focused on what it can do in the next week or so. Okay, perhaps it may take a little longer, but I'm not looking 3 months out, okay, or 5 months out. I'm looking swing trade is very short-term oriented. All right, so that's Bitcoin. Let me know if you have any questions. I see some stuff in the chat here. DJ, good to see you. And Michael wanted to start position in NVIDIA. Okay, so we'll talk about that. Jay, okay. All right, nice to see everyone here. By the way, if you're new to the channel, please make sure you register for our YouTube channel here. Also, please press the like button if you like my video, so it encourages me and lets me know I'm doing the right thing. And make sure you check out our website at greenbridgeinvesting.com. We do have the signal service, as I pointed out, with our pricing page there, and we have a 7-day free trial. So I encourage you to check that out. All right, now, so that's the Bitcoin situation. Now, we also sent out a XRP alternate trade. Okay, what is that? What is an alternate trade? So the alternate trade means that we are looking to take the Bitcoin trade, but we're not going to take both. Okay, I mean, for our own portfolio, for our own track record, we're not going to take both. It's either one or the other. It's basically the same trade. Now look at the pin bar on XRP. Okay, just like Bitcoin, that is what you should see. Right, and Bitcoin is the leader. Hasn't broken the high of the pin bar. That is what you should see. Even if it takes out the high of the pin bar, if Bitcoin isn't doing it, I would be suspect of XRP, because XRP is a follower. It is not a leader. So, again, for those that like to participate in a less expensive coin like XRP, like some people, we were having a conversation in the chat yesterday about this. It allows some people to obviously put more money to work because it's cheaper, and you don't have to use leverage, rather than an expensive Bitcoin. So and this thing also has some potential. I mean, we're looking at like the $1 area. Obviously the targets are in that trade idea that we sent out, but the $1 is going to be an important area for XRP. But this consolidation, these are ideal for bullish breakouts because this is a momentum continuation pattern, and the momentum is not bearish. Okay, as you can see. So I just wanted to highlight that. Those are the main ones that that we're tracking right now. The rest of them, if you're following an altcoin, like Litecoin or something, look, same situation. Pin bar, it's sagging right now, But if the buy signal occurs, it'll probably occur across the board. Do you take them all? No, because that's all the same trade. It's too risky. So you have to pick one, and you have to have your risk defined. Like, for example, if you like Litecoin better, your stop is obviously going to have to go somewhere below this pin bar. Probably, I'd say, 72 is the low, so perhaps 71.50. You have to give it some room, okay? And your targets will also have to be proportional. Some of those, you're going to have to use discretion and figure that part out yourself. Your reward risk needs to be greater than 1-to-1 at least, okay? If it's less than 1-to-1, your targets are obviously too tight. All right, so just wanted to mention those real quick. Now, let me cover gold, because when people were asking about longer term investments, and I love the metals. Why? Why do I love the metals? Because the metals have been hated. They've been hated recently, right? Gold just a week ago or whatever, a little bit more than that, was pushing this low at 1764. And as we know, fundamentally, there's no reason for gold to be doing something like that, right? So when the buying comes in, man, it's sharp. This thing just goes very hard. I mean, I couldn't even call a trade on this thing because it was too swift, and it has not given any specific or clear setups. So, what am I going to do? But now we have this little pullback in gold, okay? And this may be an inside bar for a long. Now, does that mean you have to trade the CFD? No. This is going to lead mining stocks, right? So now, again, I'm talking short term, but gold is right now potentially developing a higher low, which, if this inside bar is taken out, the high, then we should take out this lower high over here, okay? Lower high relative to these highs. Once that high is taken out, you will have a higher low in place. That'll be established at that point, right? Once the high is taken out up here, which is what price? What is that? 1875. Okay, and then this thing should be on its way. You'll be back in the middle of this range here, which is it's a pain to be in the middle of that range. But if this broad bullish trend continues, because there's nothing bearish about gold right now, although some people were saying it was bearish back here, it was not bearish ever, because we have never taken out any major supports. 1840 was an important support, but as you can see, it didn't spend much time below that support. Right? It came right back up pretty relatively quickly. And now we're fooling around in the area. So my point is this. If this thing develops at higher low, we can see a resumption of the bullish trend, going into the early part of next year. That's a long-term bullish outlook for mining stocks, right? Or stocks relative to gold, perhaps even silver. We've been looking at WPM, which is Will Wheaton Precious Metals. No, it's not Will Wheaton. That's my joke, but it's Wheaton Precious Metals. And we'll take a look at some of those charts. But I want to point out gold because, again, gold is setting up for a potential long and for a swing trade, which, again, I also like it for position trades. I like gold in general, or metals, okay? And we'll talk about some other things as well. But I wanted to point out gold. And on that note, I just want to mention it real quick. Look at the euro. Look at this. Okay, this is a buy signal right here. Forex has been very, very difficult in the recent couple of months, I guess because of the uncertainty in the dollar and all the stuff that's been going on. But right here, you have a potential breakout on the euro, and you have a higher low. I mean, basically, this is the same kind of pattern I'm looking for in gold, except the euro is in a much more aggressive position. Okay, the euro had broken that consolidation, this little minor pullback, and now look. Right, we close like this, which pretty much, right, this thing's closed, or it's not really going to move until, the evening, if anything. The Forex closes at, 5 p.m. Eastern time. So, but this right here, if you were interested in the euro, you can look at the low. What is that? 2073. So basically, 2050 would be like your stop, and 2139. So figure 2150 would probably be the entry. You're looking at 100 pips of risk. And something like this. That's a lot for the euro, but that's the way it's moving right now, okay? That thing breaks out, this thing has some room here. So again, that would be a swing trade idea. So I just want to point that out for those that trade Forex. I'm definitely liking that. I've been arguing that the euro has been strong all along, All right. Many of you remember every time I've brought up the euro, I've said, this thing's strong. This thing is strong. And people say, no, it's not strong. No, it's at a resistance, blah, blah, blah. And I said, the high 16s is a range low, right? Kind of like what gold just put in. And this thing is strong. What did they say to me on the Talking Market Show? Well, in Europe, in the Eurozone, they have all kinds of problems. And, the euro makes no sense. There's no logical reason for the euro to go higher. Well, here you go. Doesn't matter what logic, there is no logic in markets. You can't go by logic. And that's a nice example of it. So I just wanted to point that out. All right. So let's move on here to the stocks. And then I'm going to get to your questions. Everyone, thank you all for posting these questions in the chat. I'm going to get to them. Let me see how I'm doing with time here so I don't overdo it. Okay, so 15 minutes. All right, so I want to just talk about, before I talk about your individual stocks, I want to talk about the indices, right? Because this was a tricky move. So it started with the sell-off yesterday in the NASDAQ. And we saw this, we talked about the level, right? That's why I have this big blue box here on my chart, which you can see. That's the reversal zone for this thing, and it tried to reverse, okay? Leading up to that bearish candle, we had these very slow and slow grind days, which was very hard to trade through that, especially intraday, because it's like you don't know what this thing really wants to do. So followed by the sell-off, gets everyone short, right? Okay, now we think it's a short. Now, what did I say earlier in the chat room today? I said, watch out for this candle. We have to see if it reverses in everyone's face. Because overnight, it had pushed the low. It broke the previous day's low overnight. But overnight doesn't count. You know why? There's no volume. So if there's no volume, I don't care what it does. The move is not going to have as much weight, right? And that's the situation that we got here. Because we can't lose sight of the fact. Now, we're at an important resistance, but we can't forget that we're in an optimistic time and this trend is not bearish, right? We have to remember those things. As much as we want to short this, as much as I want to short it. So I've been caught many times in these situations, so I know better to wait, right? So now we have this little bullish pin bar, which we take out the high of this pin bar tomorrow, right? 12, what is the high here? 12,450. And right now we're at 12,392. So we take out tomorrow's high. I'm sorry. If we take out today's high tomorrow, that will be a long signal. Now, it's a long signal at a very, very tough location. So we have a lot of conflict. What do you do with this then? Should you short it? Should you buy more stocks? What should you do? Well, the thing is, look, it's a long signal in a trend that's generally bullish. It's just it's a vulnerable location. So if we see buy signals in stocks, and we've been seeing some buy signals and they've been getting stopped out, right? It's okay to take them, but cautiously. Perhaps in this situation, it would be wise to take smaller size, or maybe, or be a little more conservative with the stops, or be quick to get out on the, if you have a profit target, be quick, take a smaller profit target just to reduce your risk, because we don't know if this thing's going to make a higher high. If it does, and we do have this higher low established, if this establishes a higher low right here, and we see that push higher, well, we're still inside the reversal zone. This reversal zone can go all the way up to 13K, which that's tough because it can lure a lot of people, a lot of longs thinking, oh yeah, the market's fine. We're making new highs forever. And the higher it goes, right, the more vulnerable it gets. So for swing trades, if you're going to take stocks, okay, this candle, it's worth the try on the stocks. It's worth the risk because you're pulling, you have a mini higher low. And in theory, it should go for the higher high. But once it pushes that high and it starts to get into the higher regions of this zone, that's where you have to be very cautious, okay? Because if this thing fails again, especially after this top, if this thing fails again, it's going to there will be more longs and it'll be heavier, okay? Which means the sell-off could be more dramatic. Now, you saw how dramatic it was yesterday, right? And that was nothing. That was like a joke yesterday, all right? But how many people did that fool? How many people got short? How many people were calling for shorts? We had to take precautions. We canceled a lot of our long orders and, Andrews got out of some stuff because you have to take some precautions here. but now we see this candle here. So just something to keep in mind there. You can't always get sucked into the nonsense or react. Okay, let's take the S&P. S&P, same story. Okay, same story. That's a higher low. Of course, we have to take out the high of the candle, and we have to take out this higher high here at, what is that, 37.15. But this is what a strong market does. It makes a higher low and then goes for the higher high. So now it would be wise to anticipate stocks doing a similar thing if we're getting a strong market. Okay, so I want to get to your stocks. I just want to point out two stocks real quick before I get into your stocks. The trades of the week, because I saw we had some mention, people getting stopped out of these trades. I want to address PLL first. This is Piedmont Lithium. I sent this one out yesterday, and it's been tricky. Now, the stop on this thing is 23.80, okay? Today's low is 25.02, so it's not stopped out. But one of our members mentioned that he got tapped in early and then stopped out because he used a tighter stop. And then we were talking about, is it the broker's fault? You know, are these brokers, especially these offshore non-US brokers, are they making their own spreads that are not convenient for you? Well, it turns out that these orders were filled pre-market, okay? So one thing to keep in mind with these type of stocks, because this is a pretty thin stock, that's why it moves, you know, in a crazy way when it moves. Pre-market is not a good time to place orders, okay? Because in the pre-market, it's very easy. It's a lot easier to manipulate a stock, especially a stock that is not a heavy float stock. So if you have an order and a market maker can clearly see that, you know, it would be advantageous to tap that order, they can make that happen, right? Obviously, they're taking the other side of it, and now you're caught in it, right? So here's the thing: if you see a trade of the week, wait for the market to open. If it's gapped higher slightly, or it's going through the buy stop at the open, so what? You may not get the best price. You get a slightly worse price. As long as you reward risk, like you could see here, if you got a worse price, you know, the entry on this thing was 28.80, right? So let's say you bought it at 29 even or something like that, right? How adversely would that affect this risk reward, right? 2.0, you got a whole point. So if you bought it at 29, the reward risk may be reduced by, maybe it'll be 1.8, right? Or something like that. That's still good. That's okay. As long as it's not below 1. You're just getting a slightly worse price. You're better off doing that than getting caught in these situations, okay? Because the whole purpose of using a buy stop is to avoid getting caught in this type of stuff. So, you know, I'm sitting there like, you know, criticizing Robinhood, and meanwhile, it's really because it was a pre-market situation. But I'm sure Robinhood plays their games anyway, because, you know, you can't trust these people. All right, that's PLL. Now the other one, AUTL, which was the previous one. Now, okay, so this one took a little hammering here. It tried to go. It had a good start, and then it gave it back. Now, yeah, so this one reached its stop. The stop there was $9. And what's this thing at today? $8.82. Okay, no problem. Now, this is going to happen, right? So a trade of the week doesn't mean it's a perfect trade. Some of them work out great, but they get stopped out as well. I mean, we were playing a pattern here, just like we play the similar pattern across the ones that work, and it tried to go, and then it got tapped out. That's, you know, the nature of the game. But stops, you have to look at it this way. Stops are good, okay? They save you money, because some people, what they're going to do is they're going to hold on to it anyways. Yeah, I'm just going to hold on to it. How much lower can it go? Next thing you know, it's at $5, right? So take the stop, take the loss, no problem. And here's the thing, keep it on your radar, because how many times have we seen this? Like BLI pulled it, you know, the BLI got a little nutty, stopped out, and then turned right around. Same with FSLY, right? Same thing, got a little nutty, stopped out, and then turned right around, right? And we got back into that FSLI. So something like this, look, you're still at a decent location, right? The low here is 932. So if this thing can give you a reversal tomorrow, because obviously this is not a good candle right now, but if you could see a pin bar tomorrow, or an inside bar in this location where it is right now, that would be a failed low, this area. So that's okay to get back into. You know, obviously you're going to have to put your stop, you know, in something like this, you should probably have your stop about $1, $1.50 lower, something like that. But if you see the reversal, the targets, you can still use the same targets or maybe adjust them lower slightly. I mean, the targets on this thing, the first one is 12.50. So what was this high over here? Almost $12. So maybe you put it at 11 and a half or something like that. So it's okay to adjust lower in order to, have a better chance of reaching a target and reducing risk. All right, so I just want to point those out. Let's get to your questions now. Okay, and again, everyone, thank you for your questions and listening to my, man, I talked for 25 minutes. Okay, I was trying to get that less. All right, anyway, so let's talk. Let's do this. So Michael, I wanted to start a position in NVIDIA. It is at the low of the consolidation, forming a broader wedge. I only want one share for now. Would you buy it here or wait for a better price? Okay, so let's take a look. NVDA. So obviously this is a semiconductor leader. We all know NVIDIA. And yes, Michael is correct. It is in a consolidation. While the market, we saw, remember, NVIDIA is going to move with the market. Okay, NVIDIA is pretty much going to move with the NASDAQ. It's like a NASDAQ leader, right? So you have this consolidation. Michael wants to know a position, which means that's a longer term type of trade. You only want one share for now. Would you buy it here or wait for better prices? Well, look at it this way, Michael. You're near a range low, okay? You're at one potential range low. Not a bad place for one share. Not a bad place, especially with the NASDAQ trying to turn around with that candle that we looked at. So if you want to accumulate carefully, what you want to do is look at the inflection points, right? So you have one right now. We can argue that 518.5 is an inflection point because it tapped here, back in November, and it has some support there. So that's not a bad place for one share or a small position. And if it clears it, then you're looking at, what is that, the 490s? That would be your next area, okay? And if that gets cleared, then you're looking at this area here, which is in the 460s. Now, of course, the market would have to have a significant pullback for you to get here on NVIDIA, because if the market doesn't pull back, this is not going to pull back. If anything, it'll stay in the range, most likely, unless, of course, it has its own specific news. But typically, these are market stocks. So now, and then it's always a good idea, if you're interested in long term, to have extreme prices in mind. Does that mean we'll get there? You never know. Okay, so what would be more extreme prices? Well, you want to look back and look at previous resistance levels. And these are some of the resistance levels that I can see on the chart right now. Okay, these are potential opportunities if the market can revisit them. 422, 366, and 312. This would be very extreme. But those are the prices where you want to take your small bites and accumulate. Now think about this, Michael. So let's say you bought one share now. And let's say it pulls back to 481. What is that? No, 461. So let's say you buy one share every single time. Let's say it touches all these levels. Where is your average price if you bought one share at each one of these levels? Your average price is going to be right here in the middle. Okay, at 422. So is 422 a bad place to own NVIDIA? Well, of course, right now you'll say, no, not at all. But if it's fooling around at 312, you'll be like, wow, 422 sucks. It's 100 points against me. But if you have a small position, as long as the company still is doing what they're doing and they still have their solid fundamentals, you're buying a high quality stock cheap, okay? And the idea is a long-term position, the idea is to average into it, okay? As long as those fundamentals stay intact. Now, if NVIDIA has, their products are no good anymore and they're going out of business, well, then it's a good idea. If it starts breaking all the supports and the stock market is also getting hammered, then you don't have to keep buying, okay? You can just wait until stability comes back, because there's no need to keep on taking more and more risk until things, settle, right? Just like we saw with Bitcoin at 3K. We didn't just step right in front of it, right? We bought a little, and then we waited for stability before buying more, okay? So just something to keep in mind there. So a good question. Jay bought just 100 million Bitcoin. Let's see whether this changes. Oh, okay, yeah. When did that news come out? So about Bitcoin, because you're hearing all this news, right, and whatever, and people react to stuff like that. I mean, every time I'm talking markets, Henry brings up news like, oh yeah, they did this, yeah, they did this. And it's like, I don't care what they did. When we got long Bitcoin back here in October, when we got long back here, I remember, I'm going to point this out just as an example for news, right? And I'm not picking on you there, Jay. I'm just saying because other people will take news like that and they'll do something with it and think it's valuable. But you have to keep in mind made that announcement, but I would love to know exactly when they bought it. Did they just buy it right now? Because if they bought it right now, they bought the top. Why would they do that? I would hope that they were buying it along the way and just bought a smaller portion at the top. But we bought Bitcoin back here, right? And when I put that order out there, people laughed at me and said, "Oh, yeah, Bitcoin's going to go to 5,000, blah 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 blah." And that week, Square came out. I remember I put the trade out on a Monday. That Friday, Square came out and said they were buying Bitcoin. Oh, no one saw that coming. I didn't see it coming either. All I was doing was following the chart and the footprints on the chart. Okay, so just wanted to point that out. So thanks for bringing that up. DJ, NSE, 1115 entry. Okay. What is Force Motors? What's the ticker for that? Let me see if I type that in. So is that the Indian stock exchange? Force Motors. Yes, I think so. Okay, hold on. Let me pull that up here. Force, right here. Okay, so this is Force Motors Limited on the NSE. Okay, and let's see. Oh wow, nice move there. So the first thing is we want to look at levels and we want to look at trend. Well, we can argue right now at this point since April, this thing is, I see a series of higher lows and higher highs since April, right? So we can argue that the trend right now is bullish, right? From this low to where it is now, I see bullish structure. Now, levels, let's look at support and resistance levels. You have an old support, new resistance, right? Which is now back to a support here at this price. Basically just below 1200, okay? You don't want to be exact with those levels because they're never exact. They only look exact after the fact. So I like to round it to around the whole number, which in this case would be around that 1200 area. Okay, so that's right now, that's your next support. I mean, or historical support. You actually have something right here as well, these levels right here. But that right is obviously acting as a resistance because look at the price action. Look at we have a selling candle inside bar. It's getting a little hesitant here, right? So obviously people recognized that level back there and there's a reaction. So what do you do with this thing now? Well, I wouldn't buy it at these levels. I would wait, especially after such a vertical move. I would wait for some sort of pullback. Now, it's possible, just like, with Bitcoin, when something is very strong, it may consolidate here a bit and then take out that resistance and just go higher, right? It may just do this. Now, if you get that, it's an aggressive type of trade. It's a breakout trade, and if you're nimble enough and you're willing to take that risk, hey, I say go for it. I mean, it's strong, but just keep in mind, these can just be prepared for the fake out, right? If the fake out appears, meaning it tries to go and it fails just slightly higher, that's a good time to make an adjustment, okay, if you see that. A lot of people don't know to look for that and they just stay in it. But it's strong, so I like that. Let me see what else. Fluorine, Navin fluorine. Okay, let's take a look. N-A-V. Let me see if I can type right today. N-A-V, Navin fluorine. All right, so it looks like this one here. All right, so right off the bat, bullish, right? I mean, it took me how long to figure that out? 2 seconds. Bullish structure, so that's good, right? So you're looking for longs. The next thing we want to look at is support and resistance levels. You have an old resistance right there, which should act as a new support. That's a pretty solid one. You have like 4 touches there. So you're looking at around that 22 area, right? That's your broader support. Then you have this little situation right here. I would call that a minor support because you don't have a lot of touches here and there's not a lot of time spent there either. Okay, so this would be more minor. Now, let's look at the price action, and I see a little inside bar that's developed, and it's took out the high today. So there's a buy signal in there. I mean, even though these are red candles, there's actually a buy signal. Yesterday's high was 25.84. Today's high is 25.95. So took out the high. There's a buy signal. Risk can be measured from this low here, 25.17. So you figure around 2,500, around there. And then this thing obviously needs to make that higher high. It will need to do this next. If it fails, then you're in a consolidation. A lot of times it'll try, go slightly higher, and go back inside the consolidation. Remember, it's not necessarily a bearish thing when it fails. It can just, go back into the consolidation and gyrate some more before it breaks out. So you have to be able to adjust to those situations. But right now, this isn't a bad swing trade idea. It's not bad. You can measure your risk pretty well. You're in a strong structure, and theoretically, it should make the higher high. I see that these are pretty significant. I don't see any highs going back in history here. So you're at all-time highs basically, or near them. So yeah, I would expect that higher high and see where it goes from there. Okay. Risk is obviously defined by 2507. I'm sorry, what is that? 2537. So 2530-ish or 25 and a quarter, followed by 22 even. Those are the areas where you would define risk from. And if you're in a swing trade now, then yeah, you'd be using that 25.37 or basically 25.25 or 25 even to define your risk. Okay, and then you would distribute your targets accordingly. All right, so good questions there, DJ. Oh, nice, DJ, on that NYCB. Yeah, I made a mistake on that one. You obviously got the better. The strike price. I picked the $12 one, which was not a good idea, but hey, it may go there. Anyway, I didn't spend much money on that, but nice job on that. That was a very aggressive trade, and no one saw that coming, right? No one. Whoever talks about NYCB, no one. Okay, but I spotted the structure, and these are the kind of situations I like. I mean, we talked about this took like weeks to play out, and it didn't go our way right away either, right? It gyrated like that first, okay, but that's a nice example. Groupon is another one that has done very well. This is the trade that we sent out on Groupon back here in October. Okay, and it went to all three targets, right? Target 3 was 35.50. This thing went to 38.37. Today, this thing's at 35.14. So, again, that's what I like to see. Not things like right now, I wouldn't touch Groupon. This is where the Robinhood traders are all piled. They've piled into this thing, and they let us out, right? That's the idea. So, I pick on Robinhood traders, but you know what I'm talking about. The people that react, who are just reacting to information, and they provide the liquidity for the people that are in before them to get out, right? That's what makes a market. Okay, so let's see what else we have here. All right, so how do you see OSTK developing? Next buy opportunity around 40. OSTK, let's take a look. So overstock. Oh yeah, nice, interesting stock there. So you have the bullish structure, right, from basically here. That's still in play, and it's been gyrating, working its way slightly lower. That's not a bearish trend, okay? This is just a consolidation. That's all this is. And it's correcting that big, broad move from that April low. So to answer your question about this one, hold on, let me go back to your question. Next buy opportunity around 40. 40, well, 40 is low, actually. See, 40 is over here. I would be looking for that buying opportunity around this level here, which is around 50, okay, or maybe in the mid 40s. So at this moment, yeah, I wouldn't touch it at the moment. This could turn into a higher low, which would be a great sign. I got to keep an eye on this one. This is like what I like to see, okay. People aren't talking about overstock. It's not on the day trader radar right now, right? It's being forgotten about. That's why it's pulling back like this. I like to see that. So if this turns into a higher low, this can turn into a buy signal sooner, but there's nothing there at the moment, okay? But decent location, a better location would be around that 49 level, and an even better location would be somewhere in the high to mid 40s. You know, I would love to see the failed low develop over here. That would be ideal if it can deliver something like that. But I definitely like this stock for a long once it can provide the confirmation, the setup and the confirmation. So nice mention on that one. Thanks for mentioning that. Okay, so these are great ideas, people. So like for those of you that may be checking this out, you know, that's one of the great things about this streaming session that we do. People bring up these stocks that may not be on your radar. Some of these, I catch some of these that, you know, they're not on my radar. I'm like, oh, I never would have seen this one. Thanks for mentioning it. And they can turn into opportunities. That is how an opportunity develops, not reacting to something because, you know, Kramer talks about it. Okay, so Michael, while you're on Forex, would you look at the euro? So yeah, Michael, I covered the euro before as part of my analysis, so hopefully you saw that. I definitely like the euro long. I definitely like that long. I'm considering sending out a swing trade, but the thing is I have gold also to consider, and I'm not going to send out both because it's basically the same trade. You know, because we're betting on dollar weakness. So DJ, PSTI, ADVM, and Barrick Gold. All right, so PSTI. Let's take a look. Oh wow, interesting. So this one got a little hammering here. Let's look at this range. Okay, range, and this is another example, great example as to why I don't like breakouts. I don't like these. This, you didn't even see this one coming, right? The chart, this is obviously on earnings or something, right? News, that's news. I don't even know what the news is, but when you see a gigantic gap like this the next day, you don't see it coming. Chart wouldn't really have helped you too much, right? As far as shorting it. Yes, you had a pin bar after the fact, but it looked like it was trying to break out. There were probably a lot of breakout traders getting into this thing. Oh, range breakout, range breakout. That's why I don't like range breakouts, okay? I'd rather buy the range low, which there were obviously lower risk opportunities. You had a couple of opportunities around that $8.50 low. Okay, so where we are now. Okay, we have that gap, and this thing is getting hammered, right? It's gotten hammered. Let's look back and find some inflection points where we can anticipate some buying activity. Let's see. I don't see anything. It took out this low here. That was a pretty important low, $7. That was pretty important. We're at $6.19. So something like this. This is where you need stability to step in. There's no stability right now. You have this candle formation could be the beginning of it because it started out trying to buy it back and then it took out yesterday's low. So I wouldn't touch it right now. You do have a failed low potential or failed low possibility relative to this low back here because that's exactly where you are, right? See, if you look here, it's basically where price is fooling around right now. So that's a good location, but I need to see stability develop. Now, one thing you don't want to do is if it starts to pop up a bit, right? It starts to pop up and like, okay, it's stable. The first thing it'll probably do is find resistance inside that gap around that $8.50 area. So you don't want to chase that. What I mean by stability is and it may take a few weeks to develop. I want to see the initial pop up followed by a pullback of some kind. Okay. So here, let me clean this up a little bit. What I'd like to see is, you know, basically pop up and then pull back to maybe that $7 area would be a higher low, or maybe a double bottom. I'd like to see something like that, and I want to see some time. I want to see it take some time to do it. Okay, so I would hold off on this one for a week or so and see where it is. See what kind of structures in play at that point. I wouldn't step into here just yet. This momentum may continue. There's nothing in this at the moment that says it will stop here. Okay, so thanks for pointing that one out. PSTI. Now let's see, ADVM. I know this is another one of Andrew's. I know he had I believe this was a swing trade not too long ago. These biotech stocks. This may have even been a trade of the week because I have it on my, I think it was a trade of the week because it's on my, I have the information on my chart here. So here's the thing with this. You have recent structure shows this series of higher lows and higher highs. Okay, that's a form of stability. I like that. It's a little complex though, because you're still up against this structure here. You're still up against this corrective movement, right? This right here, which I'm not too excited about, right? You need to clear some resistances. Now, at this point, I would wait like this. As you can see, I'm conflicted with this. You have to. There's two ways you can go about it. You can look for this minor bullish structure to continue, meaning you get the higher low somewhere around here. There's no buy signal in it yet. So right now you're just at a decent location. You're looking for that, or you're looking for this over here. A touch of these levels, right? A retest of these levels. What is that? Basically the $12 area. Okay, not exactly, but just around that $12 area. Something like that would be an interesting place. But if it clears that, then it will establish this structure as a lower high. Okay, and I do not like that because that means it's a broad lower high, and theoretically it should make a lower low. So if it starts taking out those supports, I would stay away from it. Now, if it can establish the higher low, then it should take out this high, which is 1470. All right, so that's what you have to look for. So if you get the buy signal and you put your stop somewhere below that low, it should take out that high and start working its way higher, because you need to start pushing these 16s, right, to prove that the overall structure is changing. Okay, right now it's kind of mixed. So you have to be careful with something like that. Okay, so the main thing is if the supports start breaking, stay away from it. Stay away from it until the resistances start breaking. Yeah, you can argue that resistances have been breaking, but those are minor relative to this broader structure. You need to start clearing that 16 or even this 18 area, 18 and a half. You really need to start clearing those to say, okay, you know what? Yeah, we're bullish now. And perhaps you have to take the risk to get in before those events take place, right? That's a risk you have to take. But if anything, it all begins with taking out this resistance. Okay, so just something to keep in mind there. ADVM. All right, and Barrick Gold, GOLD. So, I mean, I like gold stocks. Look, is that no, that's not the Barrick Gold. Hold on. I always make that mistake, right? I put up gold and I'm like, oh, look, looks just like the XAU. Meanwhile, it is the XAU. Okay, hold on. Let me pull up Barrick Gold, the stock. And so here's Barrick Gold. Barrick Gold is obviously going to be affected by gold, the spot gold price, and you're at an attractive level. Okay, an attractive level is 22.5 basically. Try to pop up with gold. This is why the stocks are so good, because you don't have to worry about all the noise and nonsense in gold itself. This is at a good location. I'd be anticipating with gold attempting to make the higher low that we just saw. I would be looking for this thing to either establish a higher low or a double bottom, some kind of bullish reversal in this 22.5 area. Today this thing closed at 23.09. There's no buy signal in it yet, but this is definitely a candidate for a swing trade long, and I also like it as a position trade. I mean, look at the location. That's a pretty decent support. It hasn't been at that support since June, and there has been a reaction there. Okay, I like that. I like that a lot because it spent so much time. It took a lot of time to get back there. Because if it clears that, then you're looking at like this level around here, which is what, basically $20, right? Around that $20 whole number, which isn't a whole lot further. I mean, $2. So this thing is not a it's not a Jumia, that's for sure. But I definitely like the location for both a swing trade and position trade. All right, it just needs to confirm. Now, when it comes to position trades or investments, you don't always have to wait for precision. When it comes to the swing trades, yeah, we stick to the rules, and we stick to the rules very, very closely. But when it comes to a position trade, you'll see Andrew he'll send out a trade idea, and it'll say something like, buy a small portion of whatever, step into whatever, right? So you control your risk with size. You don't have to go in with 100 shares. You can go in with 25 shares. Remember, it's a long-term play. You're looking to average into it. You don't have to buy it all at one price. As long as you're buying something that's still generally in a bullish, it has a bullish structure and it's testing supports, bigger picture supports, okay, fine, right? And if it breaks them and keeps going, you can still hold on to your shares. You just don't keep putting on more and more and more. That's the mistake. If you only have 15 shares or 20 shares and this thing goes to zero, which obviously is very unlikely, is that going to wipe you out? Probably not, right? So is that really a huge risk? No. But if you have 1,000 shares, that's a different story. So size, okay? But I definitely like Barrick Gold, and I definitely like it as a longer term play to answer the people who are asking about longer term, even though there's no signal in there yet. The signal is for the swing trade. Location, you could use location with sizing adjustments for position trades, but you always want to pick, it's wise to pick more extreme levels or levels that haven't been touched in a while, like where we are now in Barrick Gold. Okay, and that makes sense because look where gold is, right, which we talked about earlier. So thanks for bringing that up. Hey, Reese, nice to see you. Wow, Reese, what is it, like 4 a.m. where you are right now? Can you look at NCM? Sure. It's our biggest gold miner. Okay, NCM. Let's take a look. Oh, yeah, I don't think I have the right one. Do I? Let's see. NCM for the ASX. I think that's okay. Oh, here it is. Okay, so NCM. This is the biggest gold miner in Australia. And I'm not surprised that we have a similar structure to Barrick, right? Because again, what are these things following? They're following gold, the price of gold. So we have a support here. What is that? 2663. We have another one around here. It's fooling around, obviously, inside of a zone of supports. We have another one around here at 2535. Today's recent structure, I mean, this is bearish, what's going on right now at the moment, and you have a little mini lower high. So there's no reason to step in front of this thing, at least not for a swing trade. Recent structure appears to be bearish, but that's not really bearish because, as you all know, because you've heard me talk about this many times, this structure is what's in play, and that structure is bullish. So this is just correcting it. So okay, it's looking for the higher low. All right, so this is an area, again, just like Barrick, this is an area, if you're thinking position trade, this isn't a bad area to step into some shares that you plan on holding for a while. Again, you have to compensate for the risk with size, right? So what if this thing takes out the low? I mean, gold is a little nutty right now, right? And it can do it. What if it takes out 2645 or what is this, 2610? It might go lower, right? And you have to be prepared to handle that pain if you're going to hold it as inventory, okay? As a swing trade, there's no reason to buy it right now. I would wait for a pin bar to develop or an inside bar, or if you don't get those, because sometimes you just get a green candle and it just says, hey, everyone, I'm just going without you. I'm not going to give you a signal. At least wait for the break of this lower high, which is 27.93. So this thing starts pushing 28. That would be like your breakout signal, and you should have a higher low established at that point. That would also be a good sign for this thing. I would expect this thing to start pushing into the 30s after such a structure is established. Okay, so and that would also start to change this broader bearish structure. That would be basically signaling a change in structure, which is what you want to see. That's why these are great prices for metals. Okay, that's more like the type of market that I'd rather get into, for longer term stuff, not something that's pushing its highs. Okay, so, and also we all know that many of these miners, they have good fundamentals, and we know that fundamentals support a stronger gold, not a weaker gold, until the Federal Reserve starts, doing things like raising their interest rates and stuff like that. Gold is likely to be stronger than not, right? As long as we keep printing money and all the other stuff that we're doing here in this country. So thanks for bringing that up. Pepe, hey, what do you think of ECH, Chile ETF? Okay, let's see. ECH, Chile, as in the country? Chile capped ETF. So let me see here. I mean, I'm usually not a huge fan of these ETFs if they don't trade much volume, but okay, look, let's take a look. So what is this, based on the country of Chile? I didn't even know they had such an ETF. All right, learn something new every day. First thing I want to see are the levels, and these are levels. So we have here, we're at a high. Okay, this right here, this is this is a bad place to be buying. That it's a risky place, I should say. It's a failed high area, just like the S&P and the Nasdaq. It's in a failed high location, potentially, or I should say, reversal boundary area. So this is a tough spot. Okay, it can go higher, just like I'm anticipating the Nasdaq may push. It could push to that 13K area possibly, but it's not really worth the risk, because the question is, if you buy this ETF, right, where is the first place that you should consider a stop? And right now that would be this low right here at 26.85, and you're fooling around at 28.92. So you're looking at a few dollars there of risk for how much reward? I mean, how much higher is this thing going to go? Maybe $1 or so, maybe a little bit more. I don't know. I'm not crazy about these situations. I would prefer a pullback. Okay, so supports again, 28 area, this 25.5 area, or possibly somewhere in between, because in between you'd be in the middle of this range, and sometimes you could find support when you're pulling back into such an area. Okay, so I would be looking for those areas for buying opportunities for swing trades. As far as longer term position trade, I don't like it either. Position trades, you want to see more extreme prices. So I'd want to see 25, I'd want to see 23, something like that if you're looking for a bigger picture. I mean, look, this thing came off that March low. This thing was what, 18 or something like that? And it's basically, almost doubled there, almost, right? 36 would be doubling, since then. So obviously it's not a very fast mover. Okay, but those are the levels I would consider. I think this is a risky area here. When it comes to ETFs, like the SPY or the Qs or the IWM, I'm also not adverse to shorting them. So this is one of those situations, if it does give you the failed high and you're feeling aggressive, because this is a bullish structure here, this, you could try shorting some, which, I don't say that very often, but you can short some and see if you can get a pullback into there if you get the failed high. But that needs to confirm. Keep in mind, your risk will be defined by that $29 or $30 area. And as we've seen with the Qs, and as we've seen with like IWM, shorts have been very tough to work with. But at least you don't have to worry about gap risk. This thing's not going to gap $10 higher on you. And a good way to do it a lot of times is buy a put. Don't short the shares outright. Again, that's a very aggressive idea. Okay, so if you're not comfortable with that, then really don't even think about it. All right, anyway, so now looking for country-specific ETFs that haven't had a big move yet, although this is relatively weakness in it, so maybe not bad an opportunity. Right, so yeah, as far as a short, I could see, some potential there as a short. If the S&P and everything pulls back, I mean, this thing is probably not going to go much further than the S&P. So you have that potential. And as far as buying, yeah, I'd wait for more significant support. Okay, so thanks for bringing that one up. That's an interesting one. Okay, DJ, it's only 25 minutes. We still have an hour. Right, okay. Yeah, we're at 58 minutes right now, so that's how far back in the chat I am, DJ. Jeez. Okay, so let me see here. What do you make of CRM? Okay, so that's Salesforce. Let's take a look. All right, so right away, what I see is consolidation. Let's take a look at the levels. So we have here, we have this gap area right here. See this gap? There's like a gap right there. Highlight the gap. Gaps will tend to act as support or resistance levels often. You broke, this thing broke the October low there of 229.5. All right, obviously gapped again. You have this little gap over here. The gap is acting as resistance, but this is a failed low inside of a broad consolidation that's in a bullish trend, right? This trend is not bearish. From the March low to this August high, that's not bearish. Consolidated for a bit, now you're in failed low territory. This is not a bad place for a long, okay? Today's candle, you have an inside bar. This thing's closed, so not bad. That could be a buy setup. Take out the inside bar high, 224.28. So you figure 224.5, maybe a little more than that. The ideal thing you'd want to see if you take such a trade is it clearing this lower high, which is what? 229. So this thing needs to start pushing 230 to establish this formation as a solid failed low, confirm the failed low. If you take such a trade, you're going to obviously either use yesterday's candle low, 220, slightly lower than that. So you figure 218 even may be a good place to put a stop. It's a lot of risk, I mean, depending on your size. Or 215, which is the low back here. Those would be areas to define your risk from. If it takes out this high, like I said, you have some room to run. Even what I like about stocks like this is the potential, right? Just the middle of the range. Forget the range high. If you could make it to 243, that's not bad, right? So let's look at the reward risk. If you buy it at 225 and you risk, let's say 6 points, or let's just say 7 points to give it some more room. You risk 7 points, and to make more than 10, that makes sense, right? If you're able to sell this thing at 240 or maybe closer to 245, that's 243, whatever that I pointed out there. I mean, the reward risk makes sense based on what I can see there. Okay. Again, what you have to be careful with something like Salesforce, this is probably going to act more in line with the market, although the market's on highs and this thing is messing around a range low. So that is a sign of relative weakness, but again, that doesn't mean it won't find its legs, in such an area, right? There could be some stock-specific things or company-specific things that are giving it this, that put it here. Which, okay, fine, whatever. It's still an attractive location. Just be mindful of the S&P, because if that S&P decides not to be supportive and has the big pullback, this will likely take out its supports. It's just something to keep in mind. If the S&P does the slow grind Santa rally crawl, then you have a chance of realizing some nice potential here for a swing trade. All right, so I like the general idea. I like the location, and you have a potential setup there, and the reward risk makes sense. So thanks for bringing that up, Salesforce. Okay, let's see where else. Man, I'm slow today, guys. Let's see, NCM. Okay, so I got Chile, I got CRM. Hey, HS. Jay, okay. Hi, can you please quickly tell us more about pin bar strategy? All right, so pin bar. Let's go to a Bitcoin for that. All right, Mr. HS. So pin bar is very simple. As we know, candlestick pattern, and pin bar is a bullish pattern. But the thing is, really, it's about the context of the pin bar, where it appears, right? A pin bar that appears at a high that's not bullish, right? You want pin bars near a low. So if this is a low relative to these supports over here. So when you see a pin bar, it's very simple. You want that pin bar high to get taken out. That's a long signal. And you could use the pin bar low to define your risk. The thing is, you don't want to use the exact numbers because everyone uses the exact numbers. So with the pin bar high, you got to put some cushion in there, right? That's what we do. When I send out the swing trade idea, you notice I don't pick the exact high. I put some cushion in there because I need the market to work. Okay, same with the stop. I put some room in there because everyone puts their orders at the same level. And a lot of times it may tap that level, go slightly lower, right? Tap them all out, and then next thing you know, it's back in everyone's face. And they're like, I got faked out. The market makers are bad people, and all that stuff. It's this show. They're just capitalizing on the opportunities that they see. Okay, where everyone the herd mentality behaves in ways or occurs in ways that we can't even see on the chart, right? Often when we talk about a vertical candle, we talk about herd mentality, but it also occurs on order flow where people place orders, right? So if there's a lot of stop orders at particular levels, you've heard of the term stop run. What is that? Well, the market makers able to push the momentum or push the orders into those areas and take the other sides of those trades because they know that those groups of stops are wrong, right? Because they have a better sense of where the market is and where the market's going because they have more information on the supply and demand of orders. So just something to keep in mind there. So that's the pin bar. I may have a webinar on candlesticks. I'm not sure. in our webinar library. You might want to check because it's been a while. But if not, I need to do another one. I should do another webinar on candlesticks, just a candlestick review, because pin bars aren't the only one, although it's a very good one. Okay, so Grace. Hey, Grace, welcome. What do you think of TSLA? So Tesla, definitely the leader of electric vehicle stocks. It's on everyone's radar. So they're going into the S&P 500 on the 21st, right, of this month, from what I understand, and it's strong. There's no question. Tesla is strong, right? That is a bullish chart. The thing is, since it's on everyone's radar, it's going to be part of the S&P. It's probably going to turn into a market stock, which means if the market pulls back, this thing will be affected. Where for a long time, this thing just did its own thing, right? It just whatever the S&P was doing, Tesla did not care. But you have to understand, when something goes into the S&P, that means institutions are required to buy a certain amount of shares and this and that. So now if you have more and more of these heavy institutions involved, then it's going to follow the S&P. It's going to be more likely to act like the S&P. So with that being said, I don't like the general levels of the S&P to buy something like this, whether it's a swing trade or a position trade. Is Tesla a good company? Yeah. Are they changing the world? Sure. But I don't buy a stock for those reasons, because investors and traders are irrational. So they'll sell Tesla for whatever reason, right? Something comes out, Elon Musk, says something stupid, whatever. Then next thing you know, Tesla's minus 300 points and no one can figure out why, even though it's a good company, right? So I want to see inflection points. Right now, this range breakout area of those 464, somewhere around there. Perhaps this level right here, this old high of 500, nice whole number, psychological level. Those are the areas I'd be interested in if I was going to trade Tesla. I'd prefer one of the cheaper EV stocks, which I've been following, to Tesla, because they have a lot more potential, and when they move, they move. But Tesla, I would be looking for these retrace to these levels if it can provide that opportunity. If not, and you want to be very aggressive with this thing, then obviously you're going to have to look at the next breakout, which would be 654. But you're taking a lot of risk trying to buy that breakout. Again, don't be fooled by, Kramer said it's the best company in the world. It doesn't matter, right? Those people like Kramer are not there to help you, as we know. They're just pushing stuff because that's his job. He has to push stuff so they can sell ads. Watch the S&P. The S&P is not in a great location. So when we see that broad pullback, I'd be watching these levels, right? So be prepared in advance. And you don't step in front of it, you wait for the setup and the confirmation. But those are the target levels I'd be looking for buying opportunities, not current levels, okay? But I do like to use Tesla as the leader for EV stocks. So thanks for bringing that one up. I hope you found that helpful. HS, I know someone sent me a file on the chat which was very informative, but I would like to have your insight on that if you don't mind. Oh, okay, no problem. So that's about the pin bar. All right, so let's see what else we got here. Great questions, everyone. Wow, I'm going over. DJ, I am going over. Hopefully I won't reach the 2 hour, the 2 hour time spot today. Jay, have a look at TNK. Big jump today. Okay, let's see. TNK. TK, oh, tanker. This is like Stinger, like STNG, Scorpio tankers. Well, speaking of that, let's take a look at Scorpio. Doing the same thing. I brought this one up the other day, right? Scorpio tankers breaking out higher lows, higher highs. Nice. That's what you want to see, right? Changed its structure. I put this in the chat room the other day. So TNK, another tanker stock. Okay, nice. So obviously, I'm sure there are fundamental reasons why behind, but I don't care about the fundamentals. Here's what I care about. The structure changed here. The structure was lousy from, going all the way back from May to, what is this, October. The structure was lousy. Lower highs and lower lows, right? You're never going to know this bottom. You're never going to know this point until after the fact, until after it's established. It begins with a higher low, but then you need to start taking out resistances. And it started doing that. Took out this one right here, which was important, right? Structure changed, 1145. So now, what's this thing closed at today? At 1303. Okay, Nice. You can't buy this thing right now because, it's starting to get on people's radars and all that. You have this attempted breakout here of this resistance. Okay, cool. That's all good. What I would like to see, if you're looking for longs on something like TK, this is probably a good long-term play as well, because structures on these things, when they change, they're usually like a longer-term thing. I mean, when it comes to energy and oil and all that stuff, when there's a broad change, there's usually like good solid reasoning behind that. And I would expect this thing to continue for some time, right? Just like we had that bearish structure going on for like 6 months, whatever that was there. So I would be looking for a pullback. If you can get any type of pullback between where it is now, basically this 13.15 area, today's high is 13.35. So your points would be the low here, 11.30, or maybe somewhere in that area, or somewhere maybe around 12.15. If you can get a retest of one of those prices, that might be a good place to pick some up. Okay. Now again, and I'm talking swing trade. If you're interested in bigger picture, since you have a structural change and you want to take a small bite in such a situation, okay, you take a few shares, right? And then when it pulls back, you start putting on more. If it starts taking out supports, you stop putting more on and wait for the thing to stabilize, because who knows, right? Some news could come out, things change, whatever, and next thing you know, it's pushing this low again. So you have to be careful of that. But I like the way it looks right now. I would just wait for better prices. I don't like buying these highs. Even when it's attempting to push that resistance right there, you could get a failed high. Look for short-term weakness. Just like here, back here, this thing went from 12 and a quarter, pulled back a dollar or 75 cents or whatever, right? Something like that would be a reasonable pullback. So you could probably get a slightly better price, or you justify it with smaller size, but that would be for a bigger picture, not a swing trade. Okay, so thanks for bringing that up. NYCB, $10 call and $11 call. Nice. Wow, you're still there? I was talking about that an hour ago. Okay, Michael, I got the NYCB January 21, $12 call. Yeah, see, Michael, I got the same thing. And you know what? There's a problem with that one, Michael. Unless NYCB does something spectacular between now and then, which can happen, it's basically a gamble, right? That's why it's but you paid next to nothing. I mean, I paid next to nothing for them, right? 5 cents, 10 cents, so whatever. And it doesn't matter. If they're worthless, they're worthless. But the better strike was to buy $10. And at this point, if I was going to buy NYCB again, I'd buy a lot more time. Okay. So anyway, but it still may work, right? If that, Michael, if that thing could pop up to like, 25 cents or something, that's a big win. If you bought it at 5 cents and it pops up to 25 cents. Okay, thanks for the euro. I put in the request before you got. Okay, no problem. Jay, okay, let's take a look at that one. All right, I'm catching up here. I'm catching up. Oh, this one. Oh, wow, look at this. I think Andrew's mentioned this one too. This is similar to, is this similar to, what's that one called? I can't think of it right now. There's a 3D stock that we've called a few times. I can't think of it. Wow. Yeah, that's a nice move off of $4. Okay, so what I would like to see, for one, you can't touch this now. No good. You have a little consolidation up here, but this is too, like, that's not enough. You're nearing this resistance up in here, up in this area here. So this could be problematic as far as, what you're facing over the short term, that $12 area, which is what you're facing. You're fooling around $10 now. So, I mean, at this point, if you bought this thing, you'd be risking $2 to try to make $2. One-to-one reward risk, okay, but just look at the general location. I'd rather see the pullback, and I'd rather see that pullback around $8 or $9. Something like that would probably give you a much better buying opportunity. Nice pullback. I mean, even if we want to count this in terms of Elliott wave, which, is pretty clear here, right? This would be like your wave 1 right here, right? Your wave 2 pullback. In a nice simple form, that would be your wave two pullback. This is your wave 3 in play right now, okay? And you're in wave 4 of 3, so you may get like a wave 5, something like that, and then the broader wave 4, which is really, that's what you want to look for, the broader wave 4. Okay, that's it, DJ, PRLB. I wanted to say it starts with a P. Okay, yeah. So I wouldn't touch this now. I'd wait for the retrace, but definitely a good one for the radar. Let's take a look at PRLB, right? I see all of them are doing their thing. Look at that, right? Proto Labs. This is another 3D stock. Andrew's mentioned this one like 1,000 times. Not a good place for a long right now. But again, wait for the pullback. Wait for the pullback. You're looking for something in the 120s perhaps. Okay? Don't chase these things, but definitely great for the radar. Okay? How am I doing with time here? Man, I'm talking too much. 114. Okay. So let's see. ADVM, yes, swing trade and got stopped out. I know most of us took it. Okay, yeah. Stop outs, as you know, they're part of the game. Anyone that says they never get stopped out of stuff, they're lying. Options are cheap on gold. Ah, wow. So January 22 for 25, the 25 call for $3, that's not bad. $3 for a whole year? Okay. I'd take that. And it's cheap because it's a slower mover. But if gold starts to get its move on, that $3 could, become worth $4 or $5. That's what you're looking for. Wow, Reese, 5 a.m. Man, it's early. It's early for this. It's too early to be listening to me. Hard to pop in. No, I understand. I appreciate that, Reese. Reese is like in Western Australia somewhere. Okay, and we have people from all over the world here, which is really cool. But Western Australia, wow. I appreciate you stopping by. Okay, so DJ, okay, yeah. So yeah, there was. I figured there was a webinar in there. But yeah, okay. So HS, that would be great. Okay, Pepe, thank you. No problem. Are you talking about PL? Okay, so I caught up. All right, cool, everyone. So not too bad. I thought I was going to be stuck here all day, but not so bad. And I haven't said this in a while. Hey, if you're new to Greenbridge Investing, make sure you press the like button if you like what I'm doing so far, if you haven't pressed it yet. And also subscribe to the channel if you like the video. We also have a swing trade service by text, by email. In the beginning of the video, I showed you our pricing page. We have a 7-day free trial. Check that out. We have swing trade ideas. We have portfolio ideas we send by email as well. And we have a chat room. Andrew puts a lot of stuff in that chat room each day. And there's a lot of insight. Sometimes we may not even call specific trades, but there's some great trade ideas that you can use your own discretion on. And there's a lot of perspective and insight. Plus all the stuff that many people here, because most of you are members, the stuff that you guys share. I mean, Jay shares a lot of great stuff. DJ, Michael, there's a lot of perspective coming together in the room, and it's nice. It's nice to be able to, see all that, because you get a good sense of what's going on. The reality of what's going on, not the stuff that you see on TV. Sure, HS, ask away. Ask away. I'm here to answer questions. And again, if anyone else has any questions, please ask. I'll spend a couple more minutes and then we'll wrap this up. Okay. Could you please have a look at Link? Sure. So LINK, USD. I think I have to look at, let's see, Link. I usually have to look at I think Binance. Let's see here, because they don't give me good charts anymore unless I pick. All right, so Chainlink, here we go. Chainlink against Tether, right? Now this one again, so this is a Bitcoin follower. It's not a leader, Mr. HS, and we still have this resistance in play here, right, at 1565. We do have these higher lows in place. So look, the overall structure has been changing. This structure is okay. It's good to see. But keep in mind, I'm not a big fan. You have this double bottom situation developing here, which is it's a bullish sign within a broader bullish structure, going back a few weeks there. But my biggest concern, and look, you have that attempt at a pin bar. That's not a pin bar, but that's a pin bar attempt, okay? Pin bar, the open to the close needs to be much smaller, but okay, we'll take it as a try. Bitcoin needs to lead the way. Now, Bitcoin, as we know, is near 20K. So relatively speaking, if we go back and we want to look, ask, well, where are the highs of Link, right? Relatively speaking, it's around $20, right? So why isn't Link flirting with $20 while Bitcoin is flirting with 20K? So that's a concern, because again, if Bitcoin has a dramatic pullback from where we are now, then this thing is likely to take out its supports because it's acting relatively weak. So that's the thing you have to keep in mind with these. They are followers. They're not leaders. Bitcoin, if Bitcoin gives its buy signal, and you want to take this based on, potential buy signal in here at 1282, say you figure 1290 or 13 even, hopefully you can get a run to test that 15 area, perhaps a breakout, but Bitcoin is probably going to have to do something really dramatic to get this thing going. And if Bitcoin goes to 21K or something, and you're struggling to push 15K, and then Bitcoin pulls back, where's this thing going to go? Right? That's what you're always dealing with until these things start to really, get their own thing going, right? I mean, that's what concerns me about these. There are better instruments out there. I mean, XRP is in a better position than this thing. So just something to keep in mind. So they're still acting relatively weak. Okay, and everything, you don't realize it until Bitcoin pulls back. And then you're like, oh man, this thing sucks, right? So just be careful with that. Okay, so Henry, well, it's DJ, it's either that or Bill Barr, the district attorney of the Justice Department, right? That was my most recent joke, right? I don't know if he appreciated that one, but that's a political joke. Many people may not get that, but yeah, if you look up a picture of Bill Barr and you look at Henry Raines, I'm like, man, I think Bill he resigned and he joined Talking Markets because there's a lot more opportunity on our show than there is in the Justice Department, I'm sure. So anyway, yeah, thanks for bringing that up. DJ's the only one that appreciates my bad humor, by the way, my bad New Jersey humor. So Pepe, could you take a look at Aussie ticker for me? All right, I'll do one more and then we'll wrap this up because now I'm talking too much here. Okay, I'm an hour and 21 into this. All right, so Pepe, IFT. Okay, this would be good for Reese too because Reese is from Western Australia there, so maybe he can relate. Infitril. All right, wow. That's interesting. I guess that's news. All right, so here's the thing with these. Okay, here's the thing. Yeah, Bill Barr. So when you see this, that's vertical, stay away from it. First thing, stay away from it, right? Because you don't want to chase that. That's the herd mentality. I don't care if this thing doubles from here. The chances of this thing getting caught in this, the problem is you don't know where it's going to stop, right? It may stop here. It may go a few points higher, then stop. You're taking a lot of risk. The big mistake here is you buy it and it works out for you and you're like, oh, every time I see one of these, I'm just going to buy into it. Over the long run, you can't win. You won't win that way, right? Because when you do get caught, you're going to give back any profit that you made the first couple of times. You're going to give it all back, plus more when you get caught in something that gets really hammered. Just look at OMG from August. Just look at, I mean, there's so many other examples. Even DoorDash just came out as an IPO, caught a lot of people at the top. You don't want to get caught in one of those. So stay away from, if you're not in it, stay away from it. Now, if you're in it, let's look at some support levels. The first thing I want to see is support, right? And let's look back a bit here. Okay, so I see that this is a pretty dramatic high. I don't see any recent price action there going back to previous year. So you're looking at $5, around the $5 or $6 area is your support. That's an old resistance, right? So I would anticipate somewhere around there would be a new support, maybe higher if it finds perhaps around, the $6 area. That would be a projection, something like that. Now, if you're in this, Pepe, one thing to keep in mind is when you see something go vertical like this, definitely lock something in. You're never going to get the top. As I always tell everyone, you're never going to get the top. Don't try to get the top because you're gambling. Just lock a portion of what you have in when it goes vertical. Don't feel bad if it doubles from here and, why did I listen to that guy? He told me to lock some in. I could have made even more money. The goal is to distribute risk and manage risk. That should be priority number one. If you can do that well, profit or a positive outcome or a positive return is the byproduct of good risk management. Part of good risk management is having the right behavior at the right time, or effective behavior, as I like to call it. Effective behavior is distributing risk or reducing risk when you can, when all the buyers are there. Okay, so, Pepe's in from 537. Okay, nice. 537, that's a great price. So you bought the breakout, basically. Okay, nice. So then in that situation, what I would say is, at this moment, there's no sell signal. All right, okay, so you have that going with you. There's no reason to sell. But like I just said, it's never a bad idea to lock something in. You don't have to lock a large portion. If you have 100 shares, it doesn't hurt to take 15 off. Just sell them. Sell them while all these people are going nuts for it, and be happy that you distributed some risk. You want to lighten up as it goes higher. Okay, so now the next thing I would do, after you lock some in, and again, a small portion, then you want to see how far it goes. Okay, and when a sell signal shows up, there's two ways you can manage it going from here. You wait for an actual sell signal, which when you wait for one of those, keep in mind, it's possible that you may give a large portion back. Okay, because like a sell signal, after a vertical candle like this, a sell signal could be half the bar, or half the red bar, and you're like, oh man, why didn't I sell some? And now you're going to give back a lot more. So that's why it's wise to unload small portions as it goes higher and higher, because waiting for the sell signal, you know, when you're facing this kind of stuff, that's what you're facing, right? So that's one thing you can do. And then if it takes out the low of that red candle, then you know you get out of more of it. Okay, but at that point, if you've reduced your position by 50% or more, and you want to try to hold on to some, okay. The goal is you've locked in profit. Now you're a strong hand. Even if it goes back to break even, you still the whole position was green in general, right? Even if we go back to break even, you have to look at it that way. Now the other thing is if it keeps going, right, and it keeps pushing higher and higher, put a trailing stop. All right, trail the stop maybe 2 candles behind. Again, you know, if you get a dramatic outside bar, sometimes it'll tap you out and you'll be like, oh, that sucked. But the opportunity that provides is if it has a wild move where it just doesn't pull back, and we've seen those sometimes, right? Here, I'm going to pull up a nice example, Jumia. Okay, let's talk about Jumia real quick as an example, right? Jumia went nuts there for a while, and there was no pullback. If you had trailed your stop in this situation, you would have made it all the way up to the low of 35.35. Now, the high of Jumia was 40.89. So if you waited for that and then it gapped on top of that, it gapped lower. But if you had waited for that high, you would have at least had the opportunity to ride this thing to $40 right before it gave a sell signal. Even though you didn't get that top, you had to give $5 back if you waited that long. So something to keep in mind. That's the same idea. Okay, so going back to your stock there, keep that Jumia example in mind. So you can either wait for the sell signal, and as long as you've locked something in, or start trailing and just let the market tap you out. Just keep in mind, either way, you're not going to get the top. So there may come a point where it's just so high, you're like, you know what, I'm just going to get out of some. I'm just going to, I'm happy here, and there's nothing wrong with that either. The main thing is you don't want to sit there and say, I need to get every penny out of this, because that's when you hold on to it too long, and then you give back a lot more than you should have. Let the market make the decisions for you, okay? That's usually the best way to do it. All right, so I hope that helps you. Nice trade, by the way. You should have told us about that one, Peppy. Where have you been? Okay, so let's see here. All right, no problem. With our recent, watch our recent webinar. Oh yeah, right, so DJ's talking about the psychological one that I conducted a few weeks ago. That's actually, I don't think I put that. I didn't update the webinar library with that one yet, DJ. I got to put that in there. I just, I got so much stuff to do. Andrew's got me doing so many things that I can't do the important things like update webinars in the library. Okay, so yeah, I'll have to update that. It's not in the library yet. So, but I'll get it in there. Hopefully I'll get it in there in the next few days. So Peppy, give me a few days on that one. So yeah, it's and that's, why, guys, selling too early, look, that's a common thing. Even I run into that sometimes. I've been doing this for a really long time, and I still make that mistake sometimes, okay? Because it's profits are random. So you're never going to get that best price. We're like, man, I am so glad I sold it up there because it didn't go much higher, and I feel good. We're never going to feel that way. So a better thing to do is to take yourself out of the equation as much as you can. That's why a trailing stop is good, or predetermined targets are good, because you're taking profits along the way, because the higher it goes, at some point it's going to retrace. And at least with predetermined targets, you're likely to get closer to the top, but you're never going to get the top. All right, so yeah, okay, cool. Yeah, cool, Peppy. Sure, let us know. Come to our chat room, our free chat room, if you're not in there. All right, you guys, so thanks for all the great questions. Man, DJ, an hour and a half. I talk too much. You guys have to stop me. Okay, I talk too much. But I appreciate all your great questions. I wanted to make sure I answer everyone's questions. I think I got everyone's questions. I'm going to wrap this up now before I go on for 2 hours and I put everyone to sleep, especially poor Reese in Australia. He's got to listen to me at 5:30 a.m. It's terrible. Horrible, Reese. I wouldn't want to listen to me at 5:30 a.m. Anyway, all right, you guys, again, thank you. If you're new to Greenbridge, please make sure you subscribe to the channel. Please press the like button. Check out our signal service by text, by email, swing trade signal service, our chat room, and our portfolio ideas by email. We have a 7-day free trial. Okay, so go to greenbridgeinvesting.com. Please check that out. All right, everyone. So, hey, I'm trying to improve these videos, but making them longer is not something that I see as a way to improve. Because, I can only imagine how tired of my voice you must be by now. All right, anyway, you guys, so enjoy the rest of your day, and I will see you in the chat room tomorrow. Thank you again for watching.